Hi everyone, Piers Bolger here, the Chief Investment Officer at Viridian. Well, we thought on the back of some quite disappointing economic data through the months of March and April, whether it be unemployment, retail sales, industrial production and the like, it'd be worthwhile just touching base and just having a look at what support we've actually been seeing from governments globally as well as central banks, and how, in our view, that's going to provide the platform for growth through the second half of this year into 2021 as economies begin to reopen and we start to, as I said, a normalisation of economic and industrial activity. This first chart here just shows the GDP spend by countries in the OECD, and you can see here that Australia's spent roughly around about 9.5 to 10% of its GDP since the beginning of February and the beginning of COVID-19. That equates to close to $160 billion. Now, it's our view that the government will continue to provide the necessary fiscal support. It might come in different forms than what we've seen so far to date, but we certainly believe it provides a very solid platform for the economy to maintain some level of activity. But more importantly, as we move through the second half of this year and the economy starts to reopen again, that will then provide a really solid base for growth through fourth quarter of this year into next year. The next two charts just showing what we're seeing from a central bank perspective. And this chart here, the first of this chart here, is just showing from a domestic perspective with the RBA. And there's a couple of things that the RBA has been doing. First and foremost, we've seen a significant cut in the cash rate to an all-time low of 0.25%. We believe that this cash rate will stay at this level for a number of years, and the RBA has certainly been very focused on maintaining not only monetary support, accommodative monetary support, but ensuring that we have sufficient market liquidity going into this environment. And that's really led to the second element, the significant increase in the M1 money supply. This is the most liquid form of assets held in the economy, and you can see here that we've had quite an extensive uptick in the M1 money supply driven from, as I said, RBA bank policy. And from our perspective, we think that that's a really smart move, and we saw that particularly increase through the months of February and March, when liquidity in financial markets was becoming quite constrained in certain areas. And the RBA's move and the decision by the RBA said to increase that money supply certainly alleviated some of the risks associated with financial markets. The second chart here as it relates to central banks is from the US Fed, and you can see here just looking at the Fed's balance sheet, and it's expanded quite incredibly over the last couple of months. If you're comparing that to 2008, 2009 with the GFC, certainly the overall upward movement, but the absolute level that we're seeing in terms of the Fed maintaining a very sizable balance sheet, we believe will continue as we head into the second half of this year into 2021 and beyond. The Fed has introduced a number of new mechanisms and new tools by which it's trying to provide not only support to the broader economy, but equally to ensure that financial markets maintain stability and can function appropriately through what has been a very difficult period as it relates to the global economy. And central banks and markets and governments around the world continue to look at and price off what's occurring from a US perspective. So the actions of the Fed are really quite critical in the context of providing financial market support and that stability. So in our view, when we look at both these actions from governments and central banks, it is providing that floor by which economies can start to rebuild as they move out of the lockdown phase. And from our perspective, we think over the next 3 to 6 months are going to continue to remain very, very challenging. But ultimately, as I said, the stimulus packages that we've seen from governments and central banks will provide a really good platform for growth through the back end of this year into 2021. So when we think about that from a strategy point of view, we continue to focus on the growth opportunities that are looking to present themselves, but certainly very mindful of the ongoing risks that we're facing into now. So it continues to create that balance from a strategy and portfolio perspective. But ultimately, remains our core view that despite some really challenging economic data that we've seen over the last couple of months and potentially will continue to see over the next 3 to 6 months, we believe the base has been set. And we do expect with the packages that have been delivered so far to date and potentially more to come, that'll provide a really good platform for growth as we move forward.
As always, if you have any concerns about your portfolios, please feel free to reach out to any one of our advisors. We look forward to catching up again soon. Thanks and bye for now.